crazy months.
Yeah.
Yeah.
I heard about a big client
Yeah.
that you
A
got.
few good ones. Yeah, we're like, oh, we're just praising God. And thank you so much for
Amen.
just
Amen.
putting us in these rooms that just allow us to just serve and be of service. And it's just like, wow. And it's so funny how fast it goes, right? Oh my God. It's like, all
I
right,
know. Trust
here we
me.
go. Oh,
I'm a lot older than you, and I look back and I go, when did this happen?
so
I
much,
don't know
right?
when all this happened. I'm gonna put myself,
Oh,
oh my gosh, Clara. I'm gonna put myself on do not disturb.
okay.
There's my buddy. Oh, and Stacy's here, and Clara's
I
here.
know we got the fams all
We
together.
got
Hey.
the fam. We're all here. So good.
You
I love it.
guys, Tam, you're in for a treat. One of the biggest things that we ended up doing, you're surrounded by some very powerful ladies right here, Stacy and Clara and Stacy Joe and Diana. There's a few other people that'll be popping on here too for you as we get going, Diana. But one of the things that I read a book 4 years ago called Profit First. And Profit First was this astronomically weird concept. Well, actually, at that point, taxes were a weird concept to me too. So it's all good. So this book saying that I would pay everything prior to doing all of my other stuff, paying myself first, paying my taxes, and getting all this stuff automated and done was like it did not seem like a possibility. Once Ray got into the picture, I told her about this book, and we started implementing it, and it was a complete overhaul. I would dare say a big whiplash to our nervous system at first,
Yeah.
and once we
Yeah.
figured out how to do this better and Diana came in, that's when everything leveled out for us. Like we were a speedboat, like not going fast enough. And when you can't see over the hull, that was us. We're like,
Yeah.
oh my God, what are we doing? We're just flying
That's true.
blind. And then she came along and was like, okay, here you go. So thank you for being the ballast to our boat, Diana. We're super excited to share you with our beautiful community, and we'll repost this as well. But you really have saved our lives and the financial side of things. And Stacey Joe, we're coming to you next on this. So, um, but I wanted to introduce you to Susan and Tammy, who you may not know yet, but this is an incredible way that we've seen people structure their finances in a way that's a bit contrarian. It's an absolute game changer for those of you guys that can grasp it. And I'll turn it over to you, Diana. I'll let you be able to share the screen, but thank you so much for being here, and I'll let you take the floor.
Wow, we're just going right in. Okay. Hi, everybody. Um, I just want to clarify, Sammy, that I am going to talk a little bit about profit first, but I'm not going to do an in-depth. I utilize the concepts in what I'm going to talk about today, but I'm not going to do a deep dive. If anyone wants a deep dive in profit first, I will happily do that. I just didn't know that was the topic. I had a different topic that I
Oh, you go wherever you want to. I was just telling
okay.
what you do for
Okay.
us. You can go wherever you want, that you take us where you need to.
No, but
You've
I
got
appreciate what you said. I really appreciate what you said because dealing with people and their finances, I mean, you and Sam and Ray are so, you know, you're just lovely people, and everyone is lovely, but sometimes people are really upset and really triggered, or they have issues with their money or whatever. They're afraid. Most often than not, they're afraid of what the numbers are saying. And so it can sometimes, oh, thank you, Stacy. It can sometimes be very nerve-wracking to be on this side of the screen. And I'm sure they're nerve-wracked too. So when you say something like that, you calm you make me remember that that's what I'm here to do. This is what God really wants me to be doing. So thank you. I appreciate that. Okay, so I'll go ahead and get started. It's so good to see Clara from the hood, right? And Stacy from the hood, and so on. And nice to meet you, Susan, and all the other folks on the line. So want to ask a question. How many of you set a goal for 2026 for your business? Okay. So if I were to ask you, and you don't have to type it into the chat, but if I were to say, so what are you gonna, how much do you want to make this year? Or what's your top line revenue goal? You'd probably have an answer for me, right? Most of you? Okay, cool. So most of us do. And some of us set our goals based on peer pressure. And sometimes we set our goals based on an Instagram influencer. Or we set our goals based on, well, so-and-so is 10xing, I should 10x. Everyone should 10x. And that puts people under a lot of stress. Because what I find is if you don't give some thought to your financial goals, really deep thought, and you don't hit it, now you got two problems. One is a goal that you couldn't hit, and two, how you feel about it, which then influences you the next time you want to set a goal. And then you got to fight with yourself. So I'm going to suggest a different way of setting goals, financial goals. It's profit first, work backwards. Sammy, you're going to love that. But I just want to share my screen. And I just want to, everyone can see my screen. Give me a thumbs up if you can see it. Perfect. Okay. Oh, I can't spell today. Look at that. Calculating your per. Yeah, there you go. First, your freedom number from the perspective of the business. So I'd like us to back into what our top line goals should be, rather than taking it from the top and trying to jam it into our lives and into our business and trying to make all the pieces fit. And then it's like, why isn't this working? I'm going to suggest we start from the bottom up. All right. So stick with me here. So I like to start, and this worksheet, if you know, Sammy wants to make it available to everyone, I'm more than happy to make this worksheet available to everyone for you to use. But I like to set my goals based on what I need and want for my family. That's what the business should be doing. It shouldn't necessarily, it could be 10xing it, but really the point is your business should be enhancing your life, not making you feel bad because you didn't hit it. So let's start from the bottom. So I start with the first thing I want to know is, for example, how much do you need to make on a monthly basis? For some people, I know people that 12,000 would be an enormous upgrade. I know some people who say, Diana, if I don't make 40,000 a month or 50, I'm very upset. And that is all based on your life and what you want from your life and your family. I do not judge that number. I'm going to start with 12 just as a starting point, but you get to insert in that little green box whatever number it is you need from the business. Okay. In this case, we've got 12,000. All right. Then the only place you need to maybe check with your bookkeeper extraordinaire, or if you know this, you need to know some of the fixed expenses for your business. So what are the fixed expenses of a business? All right. These are things that the number might go up and down a little bit, but it is always there. So for example, a fixed cost would be like rent, would be like utilities for your business if you have a brick and mortar. The utility number might go up and down a little bit, but you're going to pay utilities every month, right? You're going to pay insurance every month. You may have payroll that you need to hit every month, etc. So that's what I'm calling, on average, what is your monthly fixed expense for your business? You may need to pull out your P&L, your profit and loss statement. You may have to look through, maybe do a little math. to figure what is that number. And yes, it goes up and down, but on average, what does your business need to live on? So this starts for what you need to live on, and then let's look at what your business needs to live on, okay? So that's the second little green box. The third green box is, these are some additional expenses that I might want to do next year or in the next planning season. So for example, if you want to buy a piece of equipment or you want to hire someone, something additional that's not currently in your fixed costs, but it's something you're projecting. That's why it says forecasted. It's forecasting it. Okay. So I think I want to hire a VA next year or an associate. So I put, about 11,000 there. That's just my estimate. It's not in my cost today, but it's going to be. All right. Any questions so far? No. All right. Well, that tells me that $46,000 a month is what we call break even. In other words, I'm paying myself, number one, paying the business, and I'm taking into consideration a little bit of strategic thinking. All right. So 46K is what I need per month just to break even. Okay. Everyone got that? Well, if you multiply it by 12, you find out you need $500,000. 552. That's okay. It's a number. Don't let that give you, the sweats. It's just 46,000 a month to keep the business going and my life going. All right. Now we get to think about what we want in addition to our salary. This is backwards profit first, in the sense that I get to play with what profit do I want to keep in addition to paying myself. You mean I can get profit too? Pay myself and get profit? Yeah. Otherwise, go work for Chick-fil-A. You don't need a job. You just go get a job. You don't need a business. Go get a job. But if you want a business, you better have a desired profit percentage. Now, based on your business, 20% might be high. For a coaching practice, 20% is really low. For a brick and mortar like a bakery or something like that, 20% is probably heavy. So the desired profit is going to be based on your industry and what is generally what a business like yours will make. In this case, I put in 20%. All right. So if I want to make 20% profit per month, oh, yes, I do. Oh, yes, I do. Well, now the IRS says, well, okay, you can. We love it, but you're going to have to pay some tax. And that's okay. I'm going to put money aside for tax. Because here's the thing. If you're paying taxes because you're making money. Now, I am a big believer in using every bit of the tax code that you can get to minimize your tax. But honestly, if you're paying some tax, it's because you're making money. And I heard someone very smart that say one day, I'd love to write a check to the IRS for $1 million. Look at that beautiful little girl. I'd love to write a check to the IRS for $1 million. You know why? Because that means I made $1 billion. So writing a check for $1 million, okay. We can get into a discussion about whether rich people pay taxes. That's a whole different kettle of fish. But if you're here with me, I figure you're not at the $1 million check for the IRS level. All right. So now if I want to take 20% profit and I got to pay Uncle Sam, here's my new revenue target. This is what I need to make in my business to hit these objectives. I want to make $12,000 a month. I want to make 20% profit. I want to have to pay my tax. I want to cover certain expenses. And I'm forecasting some interesting expenses for next year because I think I'm going to grow and I'm going to need to do some stuff. I'm going to need about $132,000 to do that. So here's your new revenue target. Not set by an influencer, not set by a talking head that says, oh, you should be 10xing. This is set by you. You get to decide what you need your business to provide. So that's awesome, but it gets even better. Because now we're going to make this a little bit more real. So now I know that my revenue target is $56,580 a month. Okay, cool. Now, on average, what does your service cost or your product cost? On average, yes, you might have higher end packages or higher end services, and you might have lower end services. I get it. We can get all technical and split that out. But on average, your best-selling service, your best-selling product, what is it? In this case, I've chosen $1,000 product. All right, this is a course maybe you're selling. Maybe that's your monthly rate that you do for coaching. I don't know. Whatever it is, that's kind of the number. So super easy math. It says, okay, if my average service is $1,000 and I need to make 56,000, how many do I need to sell per month? 57. It's just math, not hard. Okay, 57 a month. That's 13 a week. 3 per day. It's just math. So now you've got several pieces of information that I hope will help you really use your business to hit your goals. But this is real. This is real. This isn't just, oh, I'm going to try to hit 7 figures next year. You might hit, I hope everyone here hits 7 figures or better. I want that for all of you. But if, you know, let's arrive at 7 figures in a sane way, not in a just, I'm going to pull it out of my hat and try to hit 7 figures just because. So you can play with this and you can say, well, you know, what if I need, I don't know, 20,000 a month? What does that do? Okay, well, now I need 66,000 at 1,000. I need to sell 66 of these, 16 per week. I'm still only at 3 per day. Okay, that's not so bad. All right, let's keep going. Let's say I'm going to hire 2 of these people. So this was a I'm hiring a COO to run a business, and I need to pay them $132,000 a year. That's kind of what was my thinking here, but you can put whatever you need to in here. So let's say I need to hire a COO and I need to hire a new salesperson. So now instead of 11,000 a month, I'm going to need 21,000 a month to pay for both of those new people. Okay. So now I have a very clear picture of what I need to do in order to pay for my COO, pay for, sorry, someone talking have a question? No? Okay.
Oh, somebody just was on mute. I got him.
Okay. Okay. Yeah, no worries. I don't think we have that many people on. I'm happy to answer questions as we go. Raise your hand. I'm happy to answer questions as we go because there's not that many of us, so I can deal with you. Anyway, so my point is you can play with this number. Well, you know, what if I, instead of this $1,000, what if I were to, you know, like charge 1,500? What does that do? It's a simple spreadsheet, but it allows you to make decisions as a business owner. And by the way, we're almost at $1 million target. Selling 2 of these services per day with your new sales manager that you just hired. Like, come on, why not? Right? Does that make sense? Susan, you're looking perplexed. Are you okay? Oh, she's thinking. Awesome. Perfect. Okay. Anybody have any questions about this little sheet?
I think one of the things that people are saying and what I like to echo is that you make it so simple to know that there's one thing that you can focus on, right? I think we get spun up and a little in our heads about all the things that we want to work on, all the things that could work, and you make it so simple, just be like, look, one thing, work on that, and then move to the next. I think that's so brilliant, Diana.
You know, I ain't that bright. Keep it simple for me because if you have 23 different variables, I don't do so good. Okay. The other thing I thought I'd mention is, if you are gonna you might have to, if you add people, you might have to add more business expense, in the sense that you might have to spend $1,000 more a month on marketing, like ad spend or something like that. So you're going to want to look at these numbers, not just hold them as is. But so maybe I'm going to add $1,000 a month in ad spend to this number, and you can just add it there and see what are the impacts to what you're doing. Okay. Awesome. All right. So I also promised in this spreadsheet that I'm sharing with y'all, the some KPIs, in other words, key performance indicators. So how am I doing? Okay, so this is great for planning. This is great for planning. If I want to make this and I have to pay this and I have to do that and I want to, 20% profit, blah, 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 et cetera, et cetera, et cetera. Okay, so now we have a bit of a plan about what we're going to try to do. Well, now let's track how we did. Right? So this spreadsheet, I'm just going to make it a little bit smaller. This spreadsheet is really designed to help you. It's not designed to take the place of your QuickBooks. It's not, or your bookkeeping software, whichever one you may use. This is not designed to, to be the spreadsheet you give to your CPA to do your taxes with. This is a working model for yourself to understand, how am I doing based on my plan? Based on my plan. All right. So you've made your plan. Your sales have to be on a monthly basis around 79,000 based on this plan, right? So let's start tracking. How did I do? So for example, in January, obviously those numbers are not great. I sold 35,000 of product or service 1 and 40,000 of product or service 2. So, oh, awesome. I now have $75,000 in sales. Again, rounded numbers. We're not trying to tie to your bookkeeper, what she gives you. This is more or less for you as an executive or you as the owner, founder, just to kind of see, where am I? Am I on track or not? And then I find it very useful to always write down, what did I do last year? Because, every number that you put on a spreadsheet is relative. If I told you I did $50,000 this month, you don't know whether to congratulate me or tell me I'm so sorry, because 50,000 might be my best month ever, or it may be my worst month ever. Until I tell you another number, like what I did last January, now oh, she did 50,000 last year. She did 75,000 this. Now you can congratulate me, right? So every number is relative. All right. So then, don't want to get too technical here, but in this area where called cost of goods or cost of service, and I highly recommend talking to Stacy Joe as a bookkeeper extraordinaire if you need any definitions on how these things are supposed to be done properly. But high level, what does it cost me to deliver this service? What are my direct costs of delivering this service? Direct. So if you pay a contractor, for example, you're a coach or you have a coaching business and you pay a contractor to do certain things for your customers, they would be in here as direct labor. Or if you create, let's say you make bread at a bakery, the ingredients for your breads and your cupcakes, etc., those would be direct materials. Because if you didn't sell a cupcake, you don't need to buy or use flour, right? No sales, no direct costs. So this is just an estimate. Gives us something called a gross margin. I don't want to get too technical. That's another session. I'm giving you this spreadsheet so you can begin to think about your expenses, your income, and how did I do based on my plan? All right. So this is all, numbers that I kind of made up here. So this business pays $2,000 in rent and 120 in utilities and 245 in cell phone, and these are their apps and so on. And that's how, they may have some other kinds. Oh, they like to travel, so they spend about 1,500 a month on travel. And they have project supplies where they're doing some specific projects, not necessarily for a client, but for another one. And they're going to spend 2,300 on that, and et cetera, et cetera. Okay, you guys get the picture. Again, we're not trying to tie to your bookkeeping. We're trying to understand, how am I doing? Now, this is very interesting because now it's telling me that if these were actually my expenses and I made 50,000 this month in profit. Wait a sec. What did I say I needed? Oh, look at that. I only needed 13,000 at this particular thing. So this is a good thing, right? 13,000 was my projected profit. I made 50. This is awesome. We are ahead of the game. Okay. Do you understand how this works? All right. Then there's a tab on things like if you buy anything big, like assets and stuff. A lot of people aren't usually buying stuff here, but if you bought, a laptop in the month of January, you bought a new Apple. Sorry, Stacy, Apple. She's an Android person. We forgive her because we love her so much. And lighting or tablets or anything like that, you would add that here too, because by the way, that comes out of your cash. It may not necessarily come out of your P&L, but that's because it's a balance sheet item. Don't get excited. Just remember that this comes out of cash. All right. Well, then the final page is, well, how did I do? What are my key performance indicators? Okay, KPIs. So what was my revenue? What was my gross profit? What was my net profit? I didn't put my cash number in there, so just, that's okay. But then I can see what I did last month. This month I did green. Last year in January, that's what I did. Okay, so I'm ahead of last year. That's really cool. My gross margin, meaning after direct costs compared to last year. Okay, I'm doing good. All right. Net profit, way better this year than last year, etc. All right. But this is where I think there's two big gifts that I'm giving you as a CFO. One, your freedom number calculator. The second gift I'm going to give you is below. And this is for you to look at your business and have something to compare it to. All right, so let me show you. This is just a table, doesn't do any calculations or anything. But if you are a small business, generally under $250,000 a year, well, what should I be spending? What makes sense for me to spend? Well, in general, businesses that make about 250 will spend between 20 and 35% on direct costs. If you're under that, way to go. If you're over that, you should go, maybe I need to bring those costs down. Okay. Then fixed expenses. How much should I be spending for fixed expenses? And by the way, these are annual numbers, as you can imagine. So my fixed expenses should be between 50 and 75,000. How am I doing? My variables should be between 10 and 20. My owner's pay. Now you notice here, 10 to 30% of 250 is 25 to 75,000. Whereas we said we wanted 240,000. That's okay. It's okay. That's the job of the owner, of the founder, of the person who's creating the business. That is your job. You want 20,000 a month? Not a problem. You have got to be able to hit these other metrics, or else you're not going to hit it. Does that make sense? And then finally, profit, 10 to 20% on average. So I have these charts here for you that you can use if you're in the $500,000 range. You know, what should my percentages be? A larger, anything over $1 million. And again, these are generally accepted numbers. Your industry, actually, if you're a coach and you work virtually and you don't have a brick and mortar operation, in other words, you're not paying rent and things like that, your profit margins should be even higher because you don't have fixed costs like rent and utilities and so on, right? You've got just software and people. So your expense structure is pretty small. But if you do have a brick and mortar, you do have a cute little store or a bakery or something, these numbers are to be used with some wisdom of your industry. But in general, this is kind of where I like to start with my owners and say, okay, compared to the industry, this is where you are. Your fixed expenses are at 70%. Oops. Or not. But that's okay. Now we know where to start. Does that make sense? Any questions? Did I get too technical? I just promised a spreadsheet, so I wanted to make sure you guys got something that was useful for you. Any questions? Go ahead, take yourself off mute and jump in.
I think one thing that I was wondering, because all of us here we're dynamic entrepreneurs. What would you say is the best practice to understand? Like, these numbers are amazing. Cost of goods. How do we understand how we can write off all of the right things during the year? Because we have everything we do really spins into our business in a way, right? Susan's going to be on a TEDx talk, all the travel expenses she's going to do from that, all the lunches, all the things that happen from that, everyone that's popped up a podcast. Kimber Allen may be starting another business out of her podcast. All those expenses now, when it comes to doing their show, should be a write-off. What would you suggest is the category we make for that inside the sheet, or is it in here that we can look at and just
That's awesome. That's a great question. So first I want to answer something though. The average small business owner never reads the tax code and they think everything is deductible.
Wait. Let's pause that. It's not.
Sorry. I mean, it's true. Well, I'm ordering Chick-fil-A for the team every day. That's okay, right? That's deductible. No. 50% of it might be if it's the team. It depends. Oh, wait, I bought a new outfit because I'm recording and my outfit is now deductible, right? Not according to the IRS. So my first recommendation would be, I love ChatGPT. I always use ChatGPT and say, dear Chat, my girl is called Sage. Anyway, so I go, hey, Sage, I am an LLC. My top line revenue is around this much. Can I deduct the following expense? Sage will answer you based on the IRS code. She may ask you a couple questions to clarify something, but she will answer you. That's deductible. This is maybe a little gray depending on certain situations, etc. Right? So that's my first line of defense. Don't just assume it's deductible. It might be. just as a little sidebar, I just learned in the last year, an LLC is 35 times more likely to get audited than an S Corp. So if you're a regular LLC, I know Stacy's smiling and she knows, she and I talk about this a lot. If you're a regular LLC, that's great. That might be the right format for you. That's a different conversation, but you are 35 times more likely to be audited. So you want to make sure that what you're putting through your books or your financials is allowed. I don't want to see you get in trouble. Okay, so that's the first part of your question. The second part of your question, I will go into it. I love it with your question. So expenses come in 4 flavors. There's fixed. We talked about fixed, right? These are rent, utilities, cell phone. This is stuff I pay every month, whether I have one sale or $1 million worth of sales. These expenses happen every month. All right, those are easy to understand. Then there's some that are always happening, but sometimes they can go up and down based on what's going on. So things like advertising. I don't spend $1,000 a month every single month on advertising, but advertising is something as a business owner you usually do. So it's fixed, but it's discretionary. I can decide to blow $5,000 into advertising this month and not do it next month. So it's fixed, but it's discretionary. I know there's no test at the end, so hang in there. Then there's just variable spending. This is I created something and I'm putting it together and I'm sending it out and I paid shipping, etc. This is where I also will put things like basic business training compared to extra training. Doesn't matter, put it in one of them. But those are variable expenses and you don't have them every month. Like if you go to a conference in April to learn a new skill, in April you would have expenses. You don't have it in March, you don't have it in June. So that's why they're variable. So to answer your question, if I'm going to Albuquerque to speak at a TED Talk, right, my airfare, my hotel, all that, as long as it's a business type of expense, you know, would be in the area here. It's variable and it's discretionary. It's travel. I mean, and you can, you know, you can overwrite these and put whatever you want in those, you know, maybe you don't do customer gifts. Maybe you want to put hotel there or something like that. But this is where you put your variable expenses for things like that. Now, in terms of your freedom number calculator, I would say that would be forecasted. I'm going to do the TED Talk in Albuquerque in April. I'm going to blow about $3,000. It's not monthly, but it's about a $3,000 expense. So I want to build that into my forecast. Does that make sense? Does that answer your question, Sam? I know it's a long question.
That was a great one.
Long answer.
Is there a time? Is there a I guess my other question too, for some of us that are starting smaller, what would you say is that time that you should make the shift from an LLC to an S Corp? What's the actual tax savings look like? Is that too big of a question?
No, it's one that the answer is a little more complicated than just a straight number. But in general, a rule of thumb is that CPAs will use is once you're making over 6 figures in top line revenue, so your top line revenue, taxes to be taxed as an S Corp is more beneficial. The thing with an S Corp, there's a couple of caveats to that. Number one, once you elect S Corp, you stay S Corp. No going back. Well, I think you can dissolve the LLC or something, but you don't want to go there. It's the thing. Okay. Second of all, you have to do a tax return in March. It's called an 1120, and then you get it back as a K1, and that goes to your taxes. So there's a little more administration associated with an S Corp. And the biggest piece of an S Corp is you have to pay yourself, the owner, through payroll. You can't just pull $5,000 out of the bank account and call it a distribution. You can still do that, but you have to also pay yourself through payroll. So that means you're running some system like Gusto or one of those, and you're paying yourself, and you're paying Social Security, FICA, Medicare, all the stuff that goes with that taxation. Okay, so going to an S Corp is a little more administration. Generally, once you hit 100, 120, 160 top line, it's a very good idea from a tax perspective. You will save money on taxes.
I love it. And I guess kind of to piggyback on this, as we showed what not to do, would you say that there's maybe two or three top deductions that you see entrepreneurs consistently miss or underutilize?
Fabulous question. Fabulous question. I love it. Thank you for asking it. The first one is not really, so the home office deduction, because most of us work from home in this, most of us on the call are working from home. So the home office deduction, people tend to not really itemize what they're spending in their home. So if they're paying rent, the rent, okay. But if they're not, it's the mortgage, it's the pool, if you have a pool, it's the pet, the pest, the ADT security, all the expenses in running a home listed on a spreadsheet per month. And then that percentage that's allocated to your home office. So for me, 20% of my home is my home office. So 20% of those expenses I can deduct. So one deduction is people don't itemize it all, they forget. Even the cleaning lady. If you have someone who comes in and cleans your house and it's your home office, etc., the cleaning lady, the insurance for your home, all those things go into the home office deduction that most people miss. Stacy, did I miss something? Because Stacy's really good at this. Did I miss anything, girl?
Well, I was saying the real estate taxes as well. Your insurance, your real estate taxes, anything that's tied to your house.
Yeah.
I think you hit on all of it, even down to the housekeeper, even down to your coffee maker that you buy. I mean, that's an office expense. So there's a lot of benefit to that, to making sure you get all of those in there and keeping track of them. So, yeah.
Thank you, Stacy. Yeah, exactly. So that is one deduction that's missed a lot, is people just go, oh, I don't know, maybe it's like 6,000 a month. And then when they go to add it up, they're either well under or they're well over, and then they're in trouble because they went. Yeah. So that's the number one thing that I see missing. The second thing is, sorry.
Oh yeah, go Diana, real fast. Anita St. Clair asked, if another business is covering the rent, can you still deduct office expenses?
What do you mean by another business is covering the rent?
That's a good question. Anita, why don't you clarify that in there, and we'll come back to that too.
Sure. Yeah, go ahead. She can go ahead and speak if she likes.
Yeah, Anita, if you want to come off mute, feel free.
Sure. Yeah. Hi.
Hi, Anita.
Yeah, quick question. So I have a situation where I have somebody else who's been covering because they have their own business. So I'm borrowing space from them, so I don't have to really pay rent, right? So I don't have a rent cost. I don't have a there's no rental receipt. There's nothing that I could show to the IRS that says I have a cost every month, right? Even my internet, my business, all of those things, my workspace, the Google, dollars that I spend, that I have expenses for, but I don't really have rent. So so I wouldn't be deducting a home office space, but I do have office expenses. I do have advertising expenses. I do have, networking expenses, all of those types of things, right? So I'm deducting those expenses, but
Yeah.
but then there's also, I have a printer, I have a copier, I have this, I have that, right? Those are all associated with it, but it's not part of my home. It is part of my office, but it's not my home office, right? I'm not taking it out of my rent. I'm not paying rent, in other words, you know?
Yeah, if you don't write a check and you don't have a receipt, you can't deduct it.
That's right.
Let's just let's just get real clear. If you can't present a receipt to the IRS when they ask for it, you can't deduct it. The only exception to that is the mileage, and because you don't get a receipt from your car that says I drove 10 miles, but you do have to show them your odometer reading. So we won't go into that. But if you didn't write a check, you can't use it. Now, in terms of your other expenses, those are very real because you can show a receipt, right? You can show that you paid for the internet, you paid for the printer, the paper,
Right.
the inkjet, the whatever. Yeah, those
Yep.
are all legitimate business expenses.
Okay.
That makes sense?
Yeah, perfect.
By the way, I see Stacy talks about being over 50K. Again, CPAs will give you different numbers. I'm very conservative going to 100 because there's so much work associated with it, but she's absolutely right. 50K would work. If you're over 50K, you can elect to be an S file as an S corp, but you have to be diligent. Okay, top 3 deductions. Okay, so one is mileage. So that's the other one. People say, well, I'm just going to run the car through the business. It's got to be used 50% for business for you to really do that, according to the IRS. But if you don't use it 50%, and by the way, driving to the office and back does not count.
What counts so they can say that's where they're driving because that's where they're driving?
Yeah, if they're delivering stuff to clients, if they're picking things up to clients, if they're having lunch with clients, if they're going to the post office to deliver packages that they're sending to clients, all that mileage is deductible and
Awesome.
very, very reasonable. But getting to work and getting back from work is not considered deductible. Okay. However, some people just run their whole car expense through the business. Like I said, you got to be able to prove 50% of your mileage is associated with running the business. If that's not the case, people don't track their miles. And the IRS gives you, I think this year is like 69 cents a mile towards your mileage. So people don't deduct, oh, I don't know. I went to a couple networking things last month. I don't know, 10 miles, I don't know, whatever. And instead of, I come home from an event, well, usually because I'm not very good with directions. Before I leave for the event, I go onto Google Maps and I go, I'm going to this location. And it gives me the directions on how to get to that location. It also tells me how many miles it is. Right then and there, it says 12 miles, 5 miles, 64 miles. So now I know each way is 64 miles. I put that into my deductions. So that's one that's missed a lot, is the mileage deduction. And that can really add up. Oh, yes, Stacy, good one. Networking, lunches with clients. And you're right, QuickBooks actually will track your mileage. They have an app, and if you can say, bing, I'm going somewhere, it'll track it, done, and it'll put it there. So yeah, by all means, but mileage is a big one. Is there another big one that I think I missed? It's mileage, home office.
I think travel and entertainment is huge.
I find, to be honest with you, Anita, I find that people are a little too lavish with that. They, like there are specific rules where you can and should write off business expenses when you're traveling with your family. So for example, if 50% of the time can be spent on business, the whole trip is deductible. But you got to prove 50% of the time was business, right? I find people don't bother. They just, all the airfare goes in there, all the hotel goes in there, all the food goes in there, and they hope they don't get audited. Okay. That's okay. You're the one that's going to be tied up in court, not me. So, and I'm just trying to be really nice. Yes, Stacy.
And I just want to say, business meals are only 50%. So,
That's right.
travel meals are I think they might be, I guess they are 100%, or they could be partial. It's like there's a line there. But so yeah. Diana's absolutely right on that.
There's one thing though that you can do is once you've elected to file as an S corp, you are the word corp. You're considered a corporation. Corporations have boards of directors. They have advisors. Okay. Now, if your wife is, or your husband is a really smart guy like mine, he doesn't work in the business, but he's super smart. I talk to him about almost everything I do from a business perspective because he's brilliant. So the IRS, I also, for example, Stacy is one of my advisors, for example. So if I put together a trip to Disney and I said, Stacy and my husband and maybe my daughter, who will also advise me on other things, is coming with me, that's a corporate event. Everything going there and everything coming back, transportation, is deductible. Okay. As assuming I have had a meeting with Stacy and I'm not just sitting in the park eating a big turkey drumstick, but we actually did have a meeting and talk about our financials or whatever, right? So if we had a meeting, we're having coffee in the morning. Hey, Stace, what do you think? I'm thinking of doing X, Y, and Z. What do you think? My point is, if you do that properly and you document it properly, you have advisors that you can travel with. The rich will say, I had to go to Dubai for my advisory meeting. And that's how they write off the trip to Dubai. Okay. They're very smart and they take people with them. So I suggest you read up on that and structure some of your travel. Yes, it's a corporate retreat. Exactly. You travel, you structure your travel carefully so that you can deduct getting there and going back, and 50% is business. The other 50% gets paid for because you're on a corporate retreat. But you have to prove 50% of the time you were trying to do some business. So a lot of smart people have created really good write-offs for vacations and stuff like that, just by, saying that they're advisors. Like your 12-year-old's not your advisor. Don't lie. That's not going to happen. But, if you go somewhere and your advisor's there, let's say your friend does live in Orlando. Hey, my advisor's there and my trip to Orlando is covered. So things like that. So that's another one, Sammy.
Love it.
If you're an S
Yeah,
corp.
Cooper Allen made a good point. You can make your house a corporate retreat as well. There's some pretty cool deductions with that.
Correct. The Augusta rule.
Bill gave you the two fingers on that one. Huge deduction on that one, I've heard.
It is a huge deduction. You can do up to, what is it, 14 a year, Stacy, or 12? 14?
14?
14 days a year. Up
14
to
days a
14
year.
days a year. Once you're over that, no bueno. So
Yeah,
No
14
bueno.
start. So what does that mean? That means you have to check, for example, what would a meeting room in your location look like or cost? For example, let's say my nearest meeting room is a Holiday Inn down the street. They would charge me $300 a day to use that room. And then Executive Suites would charge me $600 for a boardroom. If I can prove that, now I can say I had a board meeting in my own home and I'm going to price it at $600. Even though I didn't go to that executive location, I did it in my home. I can use that as a reference and say, for me to have a corporate meeting with Stacy and to talk about my books and how I'm structuring stuff, etc., that was part of my Augusta rule agenda. It shows very clearly I'm meeting with my financial people, I'm meeting with my operations people, etc. I can deduct $600, which I never really wrote a check for. Oh, yes, the Waldorf Astoria would be a good one. Place to do it. So, yes, the Augusta rule is a very big missed deduction. Just don't go over 14. And don't go crazy. Say the nearest meeting room is $2,000 a day. They're okay. The way the
Some of
IRS
these folks have some pretty grand houses. They are worth $2,000 a day. It's
no,
pretty...
I get that. But 14 of them?
Oh yeah.
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 Right? Yeah. If you want to have one retreat at a $2,000, okay, fine. You could probably justify that. But 14? Yeah, not so much.
This was amazing. We've got about 6 minutes left
Okay.
here. This is amazing, Diana. This has been so great. Have you guys loved this? If you can put a 1 in the chat, or just let her know you love her on this. We will have this recording to know that Clara, I think, was asking about that. Yes, we got some fire in there, got some love in there, some ones,
Thank you.
some great questions that you guys asked on that. Diana, how did they get in touch with you? And doing what you did with us. And like I said, I talked about profit first, but that came off of me ratcheting back my craziness. And that's really what you did. You said, hey, pump the brakes there, little fiery Filipino. Let's see what you guys can actually do. And then I ended up being like, oh yeah, okay, so realistically, this is what we can do. This is what we should buffer for. And once that happened, I think one thing that is what was really a big turning point for us, Diana, was that it became attainable and it became believable, because I had such astronomical visions and goals. What you helped us do was like get it granular and look at what we could actually do and what we could control, because you can only control the controllables. And once we saw that what we were doing was making a difference, we actually could double down on the things that we were the strongest at. So thank you for doing that.
Sammy, you honor me with that comment. Thank you. The best way to get a hold of me is my website, dianamoret.com. Super easy. Oh, Stacy likes my spreadsheet. I will say Profit First is, for those of you who haven't read the book yet that Sammy's referring to, is basically using bank accounts as envelopes. And so the minute you get paid, money goes to profit, money goes to tax, money goes to a reserve account if you want, money goes to a vacation account if you want, whatever accounts you want to set up. And then finally, the operational expense account. And you run your business on what goes in the OPEX account only. You don't run it on the profit account. You don't run it on the tax account. Oh, and one of the other accounts is owner's pay. So you get paid what's in owner's pay. Profit is profit. You only help yourself to that once a quarter, not every day, not every week, not every month, once a quarter, and so on. And so that system is very powerful way to manage your cash, because then you look at only what's in the OPEX account. That's it. That's all you have to spend to run your business. It really eliminates decision making pretty fast. Oh, I've only got $2,000 in there. That's all I got. And I'm not touching what I owe the IRS. I'm not touching my own pay, etc. So if you want to know more about it, Profit First is an amazing book. Read it. And then if you want to learn how to implement it, just reach out to me. Thank you, Sammy.
Thank you so much for being here. I dropped your LinkedIn in there as well, so they can follow you from there.
Thank you.
Make sure you guys give her a follow on LinkedIn. This has been amazing. Anita, it's so great to see you. Thanks for popping in.
Yeah.
And then we have these experts and Anita.
Oh, no.
We love to have these as much as we can cover some of the things that, if you want me to talk about this stuff, you guys will all be losing money. But thank God we have experts in this space, so that you guys have the people that are truly the experts in their field. And it's been such a beautiful connection and friendship that we forged with you, Diana. Excited to talk to you soon. I think we have a call with next week.
Thursday.
So good.
Yep,
yeah, and I'll just
we'll be chatting.
We'll be chatting. I think it's fun too, because once you get a conversation with somebody like you in place, what Ray and I really look forward to, and sometimes it was a little challenging. We're like, hey, we're talking to Diana next week. Where are we at? Or next month. And you have these great markers. So it was fun. And we had like such an astronomical first part of the year, and the end of the last year, we're like, we get to tell Diana what's happening and see what it is. And it's so fun to be able to celebrate with somebody that fully understands your numbers. So thanks for being that person with us.
You're welcome. I'm in your court. I want to see you guys, everybody just succeed.
So good. Well, thank you guys for being part of the Evolve call today.
Thanks for having me. Thank you.
And all you guys
I
that
appreciate it.
Right here, well, kick rocks because you missed it, and we'll talk to you guys soon. The replay will be in there because there's so many gold nuggets. Oh, Diana, real fast before they go, can you drop the link to that sheet in here, and then they can have it, and then we'll also post it in the replay. Is there a way you can do that? real
Oh,
quick?
yeah, just
Here.
give me 1 second here. Let me get that sheet and I will share it. Anyone with the link? Only people with access. Oh, that's because I have it under restricted, right? Anyone with the link. Here we go. Copy the link.
And if that's your template, you can always, guys, grab this, make a copy.
Yeah, and make
then
a
you got
copy, please. Yeah, don't use the template as is, because then you're going to see your numbers all, like, what is she doing? So go into Google, make a copy for yourself. And if somebody could tell me if they can see it, if they could click on this link and make sure that they can see it, that would be great. Make sure that they can.
Yeah, we've got it. We got your freedom calculator, the sales cost, the expense report, assets and loan KPIs and terms. That is fire. You guys, so make a copy of that. Master your numbers like a boss dashboard. Diana, that's absolutely gracious of you. Thank you so much.
My pleasure.
Whoop. All righty, guys. We'll see you on the next one. And if you don't see you here, we'll see you inside the Evolved Influence Academy, or we'll be chatting with you in person on the next call. Talk to you guys soon.
Bye.